Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen. I'm a member of the board, and every Monday we meet here once a week to discuss some cycle analysis. So what we're doing today is to have a short review of the current cycles in the active markets. I need to excuse, this is again a pre-recorded setting as I am traveling right now. So this session was recorded on Sunday. So yesterday you might watch it on Monday, but we will use the latest data from Friday. This session includes just the main markets, so it will be just a quick update on the cycles for the next 15 minutes, and then let's see what the data shows us. So therefore, let's switch to our cycle analyzer here on the right-hand side. As you are aware, this is the tool we use in the Foundation for the Study of Cycles, which is available to everyone which is a member of our foundation. So it's nothing special, just what you have on your desk, also on your own. So, the main markets are a crazy move. I reported during the last sessions that the daily cycles seem not to be of any clue for the global main markets. The weekly cycles rolled over to the downside from the longer term perspective. So, and just the sentiment measure seems to be useful to check against. So therefore, in regards starting with the global main markets, let's review what I call the so-called sentiment data. So let's check the financial stress index from the Federal Reserve Bank of St. Louis and the volatility index, as these two data sets give us a glimpse on the sentiment. So let's start with the longer term perspective from the financial stress index, which is shown here. So this is the current data. Lows in this stress index corresponding to market tops, and bottoms mainly corresponding to market lows. So it's vice versa reading to the main markets. From the absolute values, we know that we are at a very, very historical low reading of these financial stress index. So if you go over the full data of this index, I think we have the same situation as we had 2007 now. From the positive side, there have not been more bullish situations from this index here. That's the absolute reading. But now let's look at the cycles. So our spectrum here shows us one clear peak with a length of 198 weeks. This is a weekly data set. The other ones are not quite useful to use here. So that's the procedure we use always, the same procedure here. Check for a clear peak in our spectrum analysis, and then we apply this on top of the data. So the one with the length of 198 also shows up here in our list. So we will activate this cycle and we will get an overlay to the chart with this cycle here. What you see then in the upper left is the so-called correlation score with the full data set. So a correlation above 0.5 is a positive correlation from the overall perspective. And the second window shows us just the zoomed in perspective. So you can define the amount of period you want to analyze. So from this perspective here, we arrive at a very important point of sentiment measures here, which is shown here on the chart. So according to the dominant financial stress index, it's a very long-term cycle here. At the beginning of December, so we're approaching now the bottom of this sentiment cycle, which in turn would give us now a timing window where we would expect the lowest stress to happen, which then in turn is similar to what we see, or we should see, a market in a topping time window now. From an absolute perspective, there's still room for the market to continue for the next days, and it's always an extreme move. But from a timing perspective, we are now in a critical window where the market extreme might come to an end. And you see here the cycle is rolling over then in January, latest by end of this year. This cycle is rolling over, so you should expect the financial stress to grow, which then in turn corresponds to markets declining here. So that's an interesting perspective from the long-term cycle, and you see how nicely this cycle has been aligned to a past tops and bottom here. So that's the financial stress index. Very interesting situation to monitor from the long-term perspective. Now let's add the short-term perspective while using the volatility index. It's also called as the fear index. It's not the correct phrasing, but you can use it this way. And now this is about daily data. So let's use the daily data on the volatility index. And we also see here that we are, from an absolute reading, at very low values anyhow. Yeah, so similar to 2020, yeah, and this way. So it's declining here. So the index is declining with smaller cycles in there. So let's see what the spectrum tells us here. We might have 2 to 3 cycles which could be of interest. The dominant or the main dominant one has a length of 173 days in this case here. So let's pick this one first. For the dominant period here, let's have a quick check here. So we have here the top, the low, a top, low, a top, low, and then it's a little bit out of sync here since now November 2020. So for full year, even though we have this low here, but then it has transitioned into a different cycle or even more shorter term cycle. That's the same what we observe on the raw data set if you use the S&P 500 directly. So therefore, from a short term or daily perspective, if we go on the daily time frame, this cycle is not in sync with the market for the full last year, so I will not use it. Maybe a shorter one is more important for the current behavior, which has a length of 74, which is this one here, which could maybe explain a little bit better the short-term moves. If we just use these shorter-term cycle here. So you see in general, it's a downtrending market here, but it seems to catch better now the short-term swings since November last year. So you can if you zoom in, you see it here, how nicely this shorter term cycle tracks the movement. And this is now interesting here. So this cycle, the shorter term cycle from this reading here is also approaching a bottom right now, which if we apply the shorter term cycle here to the daily cycles, this would also reflect in a top happening right now or beginning of October, or then the next period then beginning of January. So these two cycles might interfere each other now at the year-end period now. So because if you remember, the long-term cycle from the financial stress index pointed to a low somewhere here in November, December, where this shorter-term cycle has a top. So maybe the topping period now will continue or will now maybe flatten out, and then but latest in January next year, both cycles, both sentiment cycles get into alignment. So the financial stress index, as I showed you, will increase starting January, and the same will be applied to the shorter term volatility index on the VIX index, which is also expected to rise starting of January. So just combining these two analyses here, so in the global markets starting in January, we have a very negative projection here from at least the sentiment cycles, while the period November-December might have been some conflicting cycles in the sentiment area, so there's not one clear message. But starting next year, we really get into a negative mood as the financial stress is expected to increase. And the same, if we just add the longer term cycle here, it shows the same message. So that's the reading for the global markets. As I said, maybe then let's also update our view on the crypto assets here for a second. I think we are quite on track with the projection with Bitcoin. I did here on this channel week by week. So there's no real update as the main cycle, which is now selected here with a length of 287 days, seems to get into the topping window right now. So at the end of the year, you see the cycle is now clearly standing out, which is transitioning from the 200 days nominal cycle, which we have repeated here over and over again on this channel. So that the nominal 200-day cycle is expanding right now. So maybe that we showed you the bottoming cycle of the nominal 200-day cycle here in summer, which showed us this upswing here, which seems not to have coming to an end yet. So any long position in Bitcoin I would keep, and then let's closely monitor the situation in December if we see changing dominant cycles in the Bitcoin assets. Okay, that's it for the cryptos, and then maybe a quick view on the commodities like gold and silver for today. Let's start with gold. It's a mixed picture here with the sideways moves or sideways price line since the beginning of the year, maybe just shorter cycles. So would be interesting to get a clue on the longer term perspective on gold. So therefore I will first add more data for our analysis here and extend the in-sample period so that we have a little bit more data for gold. Yeah, so this is the data which we will use back to 2015. So 7 years of daily data. So let's have a look on our spectrum here down below. So we have, I would use 3 to 5 cycles would at least been able to pick here. So 1, 2, 3, 4, 5. These are the peaks in the spectrum. Let's start with the biggest and longest one, which is more or less a yearly cycle, 357. This one here. So there you see we are in a, okay, let's first, okay, so the overall correlation as seen here is positive on our 7-year data set, which is the first good indication. So, and then the the current situation here is just looking at this data here. We are in a bottoming period where this could be then explained by the sideways progression of the data since March this year. Yeah, then getting into October, and now we leave the bottoming area, and this dominant, I mean the most long-term cycle now suggests an expected upturn into January for gold, but just using the one cycle. So let's add also the other ones, 268 and 212. So 268, 212, which in general explains a little bit better the current behavior here. So as you see, the current correlation gets more and more bigger, but the general projection of this cycle here is the same. So we would expect an continuing upswing from mid-November into January, February. So the main momentum is shown by the most important cycle here. And just if we want, we can add these shorter term cycles with a length of 123 and 95 to this data set. So 123, 123, 95. So these are the shorter term cycles. So you will see maybe, yeah, for sure that they can explain now the historical moves better, but that's just by design because these cycles have been detected. But from the overall outlook, we still see the same progression here. Maybe the biggest upswing, or what I call the most positive energy coming from cycles, will go into the markets end November and January. So it's the same period what I'm looking here, which happened here from April to June, where we saw this big up push from or in gold. This is the same what we could expect to happen here mid-November into mid-January for this period. So that's the cyclic outlook for gold using the most important composite cycles. And last but not least, let's do the same for silver. We have a similar situation here, silver at least declining since summer this year. Let's add a little bit more. Or let's start with this data first. So let's see, even though it's a very short amount of data here, but at least the cyclic rhythm is okay. So which is more or less projecting a similar measurement here. So just looking at the very current data set for silver, so not using very, very long historical data sets here, it looks like we have now approached a midterm bottom here in since beginning of October, end of September. So we now started this upswing cycle here, and this upswing cycle here should last into January. So more or less similar outlook as we have seen in gold. However, we use quite different cycles. So that's always interesting. If you use different cycles and get a similar projection, it's even more interesting to follow that. So that's more or less the basic review we did today, or I wanted to do with you today. So I hope you get a little bit of clue what the current cycles in the main markets are. We did it on the main, at least with the sentiment data for the global markets. You've seen the update on crypto and gold and silver. Hope you liked it. Please join us next week where I will update the current cyclic behavior in the markets. Please like, subscribe. Become a member if you want to do this on your own. You're welcome. So thanks for watching and hope to see you next week.